What is going on out there, peeps? All right, remember I told you I was going to do a review of a couple of videos by Life Academy. The second one I'm about to do right now, I do like what he's talking about, but I want to point some dates out to you and some very interesting information that he shares that I think is really clever. But before we do get into that, yeah, this is 1,000 gram bar of gold. So when you guys, your goal is to get this many. That's your goal. These things are stacked up by two, I think. I'm not sure. But man, this is our goal, is to get this rich. We're just kind of looking at your goal like it's no big deal because you don't need it right at that moment. You know what I mean? That would be awesome. Okay. Anyway, speaking of gold, you guys, if you're thinking about buying precious metals, you should give our friends over there at Money Metals Exchange a consideration. First time buyers, you buy more than $100 worth of precious metals, use promo code Pimpy, P-I-M-P-Y, and get a free half ounce of silver. The link is in the description. We do have Pimpy's Investment Chat, same name as the YouTube channel. Over here, we do talk about gold, silver, cryptocurrencies, as well as other foreign currency investments. No politics. Bring the politics over to here, which is the hidden things in front of your eyes. Over here, we talk about QAnon, NESARA, GESARA, current events, politics, 9/11, false flag events, the whole 9 yards. Just be respectful of one another. And if you got a Twitter account, come join me over here on Twitter. Even if you don't, you should get one and come join me over here on Twitter, just in case they remove me off of Facebook. The link is in the description. So where are we at? I woke up this morning, I was like, what the hell? The markets are taking off like a bat out of hell. Why? What changed? I mean, cryptocurrencies were on a run. XRP, actually, last night when I looked at it, was above 25 cents. So I'm not sure what happened, but it's still teetering there, still going in a positive. Ethereum was up at 350 something, so it came back down. So there's a wild mood swings going on with cryptocurrencies because the Bitcoin was at 10,700, Ethereum was at 350, XRP was 25, getting close to 26 cents it looked like, and now they went down and now they're going up again. So I'm not sure what the heck's going on, but there definitely is a lot of volatility in the market. Don't be surprised if they're not trying to scare you in and out of these different investments. So just like when you buy cryptocurrencies, and if you want to, the link is in the description. But when you buy them, you can't panic and sell. It's just like gold and silver. You just invest in the ones you want, keep adding money to them, and then leave them alone. Just let the market do what they need to do. This is going to happen quite often. It's the same thing that happens with gold and silver, except for the prices swing much more. Look at this, 429-point increase. What the hell? Meanwhile, gold magically isn't moving. I mean, literally, there's no graphs on them. It hasn't moved at all. And I don't know why. And look at silver. So something is going on there. They look decoupled from the market, which is good, but they haven't been moving, and I'm really curious about that. I know a couple other people have talked about that, and I don't have a response to that because I don't know what they're doing. I don't know what's going on. So here we go, Life Growth Academy. I told you there's a couple videos I thought we should listen to, and this is the second one. I want to go over this, but I want you to pay attention to what he's saying because he talks about some really slick things in here, okay? Let's get into this.
Based upon a number of excellent essays by Dan Oliver of Merkerman Capital, today we explore why the Federal Reserve needs a gold price of $10,000 in order to balance its books.
Keep in mind, this video came out in April of 2020. April of 2020. We're already in October.
So let's dive on in. So the key points we'll discuss in this video are highlighted here and act as a guide and reference point as you view this video. So the true meaning of a dollar is a unit of liability for the Federal Reserve. By holding a dollar, we have a claim against the Federal Reserve, and it is their liability. In recent times, we've seen newly created currency enter the economy via commercial bank reserves, which are held as liability by the Fed. The Fed then holds treasury bills, or now corporate and even junk bonds, as their assets to balance their books. Thus the balance sheet effectively balances, and a newly created dollar is a unit of liability for the Fed. The Fed has been relentless in their drive to support the market and create crazy distortions.
Create crazy distortions. I told you the market is being artificially pumped. This happens. There's a trend. It's happened for the past 100 years when we see this. This trend happens before a huge crash. They pump up the stocks, people get sucked into the stock market, and then boom.
Where, as this picture actually illustrates, the stock market jumps ever higher as more and more hard-working Americans lose their jobs. The easiest trade currently going is to jump in and buy whatever the Fed is buying. If anything goes wrong...
Okay, wait, did you hear what he said? The latest trend is to jump into the stock market and buy whatever the Fed buys. In other words, whatever companies the Fed is buying, that's the one you want to be in as well. And he explains why.
You know that they'll come to the rescue, they've got your back.
Well, what he said was, if anything goes wrong with those companies, you know damn well the Fed is not going to let them crash because they put them on their asset books. So the Fed will come to the rescue and bail out those companies. So obviously, whatever, for you stock hounds, whatever stocks and money that the Fed is and companies are invested in, those are the ones you want to be invested in because they're not going to let those companies crash. They can't afford them to do so. So you know if something starts to go wrong, the Fed will bail them out. Now, I thought that was very interesting.
Just take a look at the sheer scale of programs that were introduced over the course of just 8 days in March 2020. Now, in the case of the PMCFF, this means acting as a backstop for corporate debt rated just one notch above junk level at BBB. And you know what? This is just the start. It's highly likely that the Fed will achieve a balance sheet the tens of trillions before this crisis actually ends. This would amount to over 50% of US GDP. Thus, the Fed and other central banks globally and their ownership of vast swathes of the economy is increasing dramatically.
Now, that's when I was telling people that makes me nervous. Because if you think about the goal of the Great Reset and what socialism is, it's the state takeover of all our major businesses. So you just heard what he said. The Federal Reserve and the central banks around the world are buying up all the assets. And he said by the time it's done, the Fed will have owned 50% of our GDP. So when I made a comment, people got all pissy about it, saying, man, you better hope Trump isn't the boogeyman, because if so, he just expedited the entire world into socialism. That was what I said for us to keep an eye on. That's what I was worried about. That doesn't mean I didn't have any faith in Trump. I do. And that doesn't mean I'm saying he's going to do it. I didn't. What I'm saying is, man, when you see what the bigger picture is, of course I was concerned. That's why he just said it. The Fed's going to own 50% of our GDP. And the central banks are doing this around the world. And who owns the central banks? Yes, the Rothschilds.
In the current economic climate, many of these newly owned Fed assets will fail and fail badly. This prompted me to do a video exploring the impact of this, and then the very next day I saw Robert Kiyosaki tweeted out the following. Is the Fed broke? Hidden in recent $2.2 trillion Congress rescue bill was buried $425 billion for the Fed. The Fed has been bailing out the world since 2008. Who bails out the Fed? Now we know. We are. Why are the Fed and Treasury hiding this from us? Buy more gold, silver and Bitcoin.
Buy more gold, silver and Bitcoin.
In fact, when QE was first introduced as a temporary support measure by former chairman Ben Bernanke, he stated that the balance sheet will eventually have to be brought back to a more sustainable level. Now, this issue of the Fed's balance sheet is a profound one and has a dramatic impact upon the likely price outcome of gold, as we'll analyse shortly. But Dan Oliver contends that gold will have to do an accounting for the liabilities held by the Federal Reserve. This chart from the excellent Macro Trends website is one we've seen before and allows us to actually identify the percentage change in the Fed's balance sheet in blue together with the change in the gold price in orange. Clearly we can see a distinct relationship here and a large potential upside for gold. But if we explore this from a more analytical perspective, we know that the quality of the assets that the Fed is now holding are deteriorating in quality.
Yeah, again, as the economies around us collapse, obviously their assets are going to collapse. You can only hype them up for so long, and eventually they're going to come crashing down.
As the economic situation worsens and company insolvencies rise, the deterioration of the Fed's balance sheet is likely to take place at a dramatic speed. So breaking this down further, Dan Oliver highlights this chart which illustrates the composition of the Fed's balance sheet. In 1923, the Fed's assets consisted of 61% gold, 22% commercial invoices due within 90 days, and 3% government bonds or treasury bills. These are high quality liquid assets, and gold was redeemable for cash under the gold standard, and thus the market actually controlled that ratio.
Yeah, that's why you need to be in a gold standard. It's sound money. It keeps this kind of crap from getting out of hand.
The Fed's average gold backing in 1933 was 54%, yet by January of 2020, a 33% backing of the Fed's liabilities would require a gold price of $5,266 per ounce and $8,600 at 54%.
Okay, so what they're saying is this. Per troy ounce, as of January 2020, if the Fed only backed 33%, or if their assets, if gold only backed 33% of their assets, gold would have to be set at $5,266 per ounce. That's only if gold backed 33% of it. If gold backed 54% of it, it would have to be at $8,600 per ounce. Obviously, if this goes up, you want to look at somewhere about let's just to be on a safe side, a 20-to-1 ratio for silver, and you can get the value of what silver will be. It's going to be up there in the high hundreds for sure. So anyways, this is when the balance sheets were 4.14 trillion. That was in January of this year.
And over the course of the last few weeks, we've seen the Fed's balance sheet go vertical, and we'll see what this could mean for the likely revaluation of gold in just a moment. Currently, the structure of the Fed's assets is represented by a very high proportion of mortgage-backed securities and long-term treasury bills. These assets are far riskier to hold in such an economic environment. Meanwhile, the already poor state of government finances is being devastated by this crisis as Keynesian automatic stabilisers kick in. Thus, tax revenues decline and government transfer payments soar through income and healthcare support. In January 2020, the Congressional Budget Office estimated total tax revenues of $3.6 trillion and total expenditure of $4.6 trillion, resulting in a $1 trillion deficit. But Oliver points out that tax revenues declined in 2008 by 20%, and clearly this time around tax take will be far, far lower and spending far greater. In fact, Goldman Sachs is projecting an annual deficit in the US of $3.6 trillion. Consequently, deficit financing or debt monetization will account for 59% of government expenditures. And next year, Goldman believes that the deficit will have been cut back to $2.4 trillion. This really could be a recipe for a potential currency crisis and a default of these Fed-owned treasury bills.
Now, also keep in mind what that does, it devalues the dollar because it's not valuable. People have less faith in it, especially around the world. So that means if you're holding currencies in other worlds, when our currency devalues, their currency will, or when the value of our currency decreases, theirs will increase against us.
But globally, debt clocks are in the process of spinning at an unprecedented speed, so the US is far from alone in this situation. And so Oliver asserts that gold must go a long way towards covering the liabilities of the Fed's balance sheet because these assets cannot be relied upon. Perhaps the most obvious way of covering the losses that the Fed and other central banks globally will face is to revalue this gold to cover a far higher percentage of their liabilities. Yet gold has not been audited at the Fed or Treasury since the 1950s, and the Treasury website still records a book value of gold at $42 per ounce.
So that's how they're keeping their records, at $42 per ounce. So obviously it needs revaluating. So what they're showing on your books here, their books, is how many ounces and the total value of that based on $42 per ounce. We know that's wrong. They have to change that. So could the Fed be holding on to way more money than they're telling us? I mean, if on their books they're evaluating gold at $42 an ounce, then we know they have way more assets.
Far below the current market value. Taking the gold held by the Treasury and by the Fed, because they now clearly work as one, and revaluing this to 33% of the Fed's balance sheet as of April 2020 at $6.1 trillion, for a 33% and a 54% backing, this would give a...
Okay, so remember he did one for January 2020. Now it's been revaluated based on, now we're looking at April's numbers. So for April, here we go. If the Fed is going to back their balances up with 33% gold backing, gold would have to be at $7,676. If they do 54% backing, gold will have to be at $12,516. Keep in mind, this is only 33% backing, 54% backing, and that is as of April's balance sheets. We are in October. So you can see the major jump just between January and April. As you can imagine, it's much, 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 much higher now. This is why I keep telling everybody you need to get into precious metals. If you could buy both gold and silver, congratulations. But you should have a balance. Silver will outperform gold. It just will. Then when the ratios get closer together, you could swap, you could trade the number of ounces of silver you got, whatever the ratio is. My guess is going to get somewhere to 15 to 1, 20 to 1. Yeah, swap them. And then hold on to gold. Because gold is not as volatile as silver. Silver goes up and down like a crazy hyper child on sugar. Anyways,
the gold price of $7,676 and $12,516 respectively. Yet Oliver is keen to point out that the sheer scale of the 1980 panic led to a gold price which meant Treasury and Fed gold reserves reflected 135% of Fed liabilities. Right now, global authorities remain determined to actually kick this can down the road by pushing out ever tougher monetary and fiscal policies. The Fed is well on course for achieving double digits on the balance sheet, and so Oliver asserts that gold will have to go a long, long way towards covering the liabilities of the Fed to $10,000 per ounce and beyond.
$10,000 per ounce and beyond. You guys, it's time to buy precious metals. I'm telling you. You see, I keep saying this, and it's not the only person saying this. There's other experts out there. See, this will be the one time that not only will you be preserving your wealth with precious metals, but this is going to be a huge once-in-a-lifetime opportunity in which you're going to be able to gain major wealth off your precious metals. So silver bugs, and so some of you out there who are struggling, you know what I mean? Talking about, man, I can only get like 30 or only got 50. Don't stop trying. You keep doing what you can. Okay? Because you can see what's going to happen. If this does go, and what the true At 100% backing, going into 100% gold standard, the national debt clock reflects the true values of gold and silver. But they're also showing you if they did 33% backing and if they did 54% backing. It's still way up there. It's a once in a lifetime opportunities. And for some of you who have really, really super tight budgets, I don't want you to stop. I want you to keep trying. Because even if you don't get a whole lot, even if you don't, I showed you when they were talking about moving gold up to about $700, $750 an ounce. And we did that when I did the Q&A. And that lady was telling everybody, look, she's on fixed income and she's still finding a way. And she got up to 50 ounces. I said, let me show you what she's got. If it does get revalued up to $750, I think it came out to like $37,500 is what it was altogether, or $37,750, I think it was. All right, so that little bit helps. So if you bought 50 ounces at like $1,000, and then all of a sudden it's worth $37,000, that goes a long ways. And I showed you that video many times that a gentleman would said his retirement plan was to get 10,000 ounces of silver. And that he had projected that if silver stayed at $18 an ounce, fixed, and it's not going to be, it'll be higher than that, he could sell 400 ounces a year and get $7,600. That will allow him to get, or actually I think it's 78. In other words, it gives him a 600 extra dollars per month on top of his retirement. And he says he can live comfortably with that. And it would take 25 years for him to go through all 10,000 of his ounces. And that's the kind of goals that you should be setting for yourself, something along those areas. All right, you guys, that's it. I told you I wanted to review a second video, and I have done so. Let me know what you think. Hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. You guys have a good one. You see right now, precious metals, that's the way to be.